The maintenance fund. So are you planning on fixing that leak in the roof? Or do you need to get that cam belt change on your car? Perhaps you never took out insurance on your Kenwood dishwasher that's just decided to pack in. Well, my question to you is, how do you pay for it all? Hey everyone, welcome back to my channel. So in my previous video, I spoke about the importance of having an emergency fund before you start investing. And what I'll do is, if you haven't seen that video, do go check it out and I'll put the link somewhere up on the screen here. But in today's video, we are now going to be talking about the secondary line of financial defense, and that is the maintenance fund, or also known as a sinking fund. So what is this extra pot of money for? What does it do?
What do you do for a living?
Should you consider having one, and what purpose will it serve? Well, in order to keep this super simple, I'm going to paint a very clear picture for you.
Just take a moment to appreciate its beauty.
So hopefully we all understand the reasons and potential emergencies that may incur in yours and your family's life to where you may need to live on your emergency fund. Now, here's the important part, and the reason we need to keep these two separate pots of money separate when planning for our financial security, and the picture shall now be painted. So let's just say you or your partner suffer a loss of income or total unemployment.
My name is George. I'm unemployed and I live with my parents.
And basically you need to access that pot of money that you've been setting aside, which is your emergency fund. Amazing, it's there, ready to go, you can use it. But what we weren't expecting was all four tyres to blow out in your brand new Mercedes S-Class 500, and £800 has instantly dented its way into your emergency fund, reducing all costs and expenses covered for 3 months, which has now knocked you down to 2 months. That's not what we wanted.
It was not what I wanted!
So this is exactly the reason we should aim to build up two separate pots which will serve two different purposes. The emergency pot is purely for living expenses, all household bills, mortgages, insurance, the cars, but ultimately it's to keep a roof over yours and your family's head for as long as possible. Basically while there's no income. The maintenance pot, on the other hand, is the sinking fund, is to complement the emergency fund.
Give me a compliment, Melvin. A compliment is something nice.
By taking care of all the smaller and inconvenient costs, such as general repairs, replacing the white goods, car services, parking tickets, fees, and any other miscellaneous payments that you may incur that you weren't expecting. You never really want to pay for them. So going forward, it's important to remember that we are aiming for the longest period of time with financial security. And if these sinking funds are put in place early enough, it will provide all the financial comfort that you may need in the future. Now, when, where, and how do we start building this maintenance fund? Well, let's start by taking a look at when you may want to consider this secondary line of financial defense.
This is Sparta!
My personal suggestion, you start building this fund once you have 2 to 3 months of an emergency fund set aside that you have total living expenses covered. But if you can achieve more, then brilliant, go for it. Now, once you are happy with your emergency fund, it's time to look at where you would store this additional maintenance/sinking fund. Do you keep it within a bank account, or do you keep it in cash, or perhaps you do a bit of both?
Where's the money?
Well, personally, I like to split my funds between the bank and in cash, and I use a 70-30 rule, and I'll explain what that is and why. So 70% of my maintenance funds are kept within the bank. It allows me to make easy transactions, by card, Apple Pay, and any online sort of transactions that happen I can deal with because I have 70% of my funds there. The remaining 30% will be kept in cash in an envelope, which is safely secured away. And these are for payments such as, workmen, labour, house repairs, perhaps a car garage that prefer cash. And not only that, when you do have cash and someone accepts it, you could also negotiate a better price.
I'll let you have them at cost, all right? Now that's £3 a box. Now come on, you know it makes sense.
Finally, to keep things super simple, for my bank account and my emergency fund, as you may have seen, I name them separate. So for my maintenance fund, I'll pop it somewhere up on the screen. I actually renamed the account maintenance fund, so there's no confusion of where the money's going. And for my cash holdings, I do exactly the same. I just name an envelope, maintenance fund, and then what I do is I keep a log of how much is in there, so when I add to it, I just note that down, and vice versa, when I withdraw from it, I also then put down the new amount that is within my cash holdings. So let's now talk about how we can build up this fund and close that gap towards financial security. And towards the end, I'll give you an idea of how much you may want to aim towards in regards to the amount that you save. Okay, so let me share a very simple 3-step process in which you may want to follow. So step number 1, ensure you have 2 separate bank accounts for your emergency fund and your maintenance fund. This is for simplicity and transparency on all transaction, and it's really important to keep these 2 pots separate. Step 2, as soon as you have hit your emergency fund target, immediately transfer that standing order over to your maintenance fund and start building that up. But if you do intend on using a similar method as myself, the 70-30 split, then you need to ensure 70% of what you're able to save goes into your bank and the 30% you have to withdraw out in cash. Step 3, 6 months of focus. And yes, if you've watched my emergency fund video, you would have heard me say this before. So step 1, I call 6 months of focus, but I do say it for a good reason. And that is, you need to start focus on building and compounding your fund as hard as possible within the shortest period of time. Basically double down, reduce your outgoings, and once you've achieved a certain level of security, then you can start to reduce how much you actually put into this maintenance fund. But my recommendation would be that you keep drip feeding and you don't stop, because essentially you are going to use it and you want to keep topping it up. Now, with this 3-step process complete, we can finally reduce what we transfer into our savings, and we can now move into active investments and begin that exciting journey towards financial freedom. But finally, how much should we save towards in our sinking funds? Well, I can't give you the exact answer because your personal circumstances will very much differ to mine. However, you may want to base your calculations on this, which I use as guidance to how much I keep by at any one time. So the amount you keep could be loosely based on the following. If you had to pay for 1 full year of car insurance, tax, MOT, so say in region of £800 to £1,000, perhaps you have to replace a white good within the kitchen, so a fridge for example, which could be around £500 to £600. Perhaps you have some minor house repairs for materials, costs, labour, stuff like that, so anywhere from £100 to perhaps £300. And also maybe you want to build in for some miscellaneous payments, maybe £100 to £500 of additional savings, you know, for perhaps parking tickets, fees, charges, something like that. So in total, maybe for a single person, you want to aim for a region of £1,000 to £1,500, and perhaps if there's a family of 4, you'd look to be aiming between anywhere to £2,000 to £3,500 in a maintenance fund, in region of those. As usual, I hope this video has offered some value and insight to what a maintenance fund / sinking fund is, and to whether you or your family may need one or would even benefit from one. Personally, I recommend that everyone should have this additional buffer which helps towards their financial security. If you'd like to know more, discuss anything, or even book a one-to-one, please use the link in the description below. And until the next video, please do like, subscribe and share, and I will see you all very soon.